sense of what's really happening in the world than Ramesh Damani. He's here in the studios right now. Ramesh, good morning. Great day to be speaking with you. Ramesh, you've seen days like these before, I'm sure. Eventually, what does it all boil down to for an individual investor?
Thanks, Aisha. Thanks, Sajid. Good morning and nice to be with you. Tough day, actually, to be with you on because there's so much breaking right now.
Yeah.
And the way the market opened, I was extremely shocked. It opened, I think, 2,500 points, Sensex down. Then it's recovered, which makes me breathe easier. You know, I think the market's probably overreacting to this particular day. Over the last 10, 20 years, we've always seen a great significant dip as a buying opportunity, and I continue to hold that view. I think the world has changed thanks to Trump. The world is changing on its axis out there. But there are always pockets of profit and pockets of loss, and investors would do well to navigate them even in the next few years.
And what's seeming like that very obvious pocket? I mean, looking at the screen right now, it really seems like oil and defense. That seems to be the first sort of hiding safe haven that one would dash to.
Yeah, that happens on a particular day today.
Sure.
In particular with oil, I'm not very bullish on the prospects of oil. I think what Trump has done is change the face of the Middle East. So you can now, after this war gets over in the next few days perhaps, look forward to a period of unparalleled peace and prosperity in the Middle East, which means energy prices will be good. Defense, yes, I think a lot of countries are now going for economic nationalism. So defense will be a high priority area. Commodities will be high priority area because people want localized supply chain. So the anti-AI plays will do well, which would be the commodity plays, the infrastructure plays, the pharmaceutical plays. I think in the excitement of this Middle East configuration, people have forgotten that they have to still deal with AI, which is like a freight train coming down to us. So I'll be very careful on that part of the segment, not necessarily bearish on it, but careful because there will be winners and losers. But I think the anti-AI plays will probably do well. And then the defense and the pharma, like I mentioned.
Ramesh, you know, if it was last week, we would have said, talked a lot about the IT sector there. You know, even though the sector has fallen a lot last week, do you see that, IT play will come back now in some way? Because over the last 10, 15 days, there has been a lot of, conversation about how IT will remain. It will be something which the enterprise level work many of the companies will be doing. Of course, there could be a revenue deflation which can come in, but the model for them is going to change now.
Yeah, Sajid, it's a great question. It's the elephant in the room. Everyone is talking about that in every broking room, every party that I've been to. Let me give you my 2 bits on it. The very famous quote by Charles Darwin, who wrote The Origin of Species, which I'm very fond of, which he said, the species that survive is not necessarily the strongest, not necessarily the most intelligent, but the most adaptable to change. Let me give you a case history in the financial sector so to put in perspective to you. Contrary to popular opinion, the BSE was not against computerization. In 1985, it was one of the first exchanges to actually launch a computerization program. What happened is the people sponsoring the computerization program were voted out, and the jobbers and the status and the old-timers came into power. So that was shelved for a long period of time. But even then, on a busy day on the Bombay Stock Exchange, you do maybe 300, 400 crores worth of turnover. Today, the combined turnover in the cash section from BSE and NSE is about $14 billion US, $14 billion. So the markets have grown exponentially, and people who understood the chain and adapted to the change have done prosper. They built global brokerage franchises, global investment portfolios, global brokerages. But the people who wanted to make money only by being a jobber, for example, or only by being an old-time investor in the BSE, didn't prosper. So I feel the companies in the IT sector that will adapt to change, and I see already evidence of TCS talking that even if it cannibalizes the revenue, we want to go ahead with it. Understanding and waking up and smelling the coffee, so to speak. So I think the industry will change. No doubt it's a very profound change coming. But I think by writing off what the market seems to be doing in 3 weeks, the IT sector, is the equivalent of throwing the baby out with the bathwater. So I think the market is being a bit harsh on these companies.
And you briefly spoke about the fact that, as countries nationalize, they will put more money on defense. Does that open up a lot of opportunity for the Indian companies? Because the big OEMs are busy supplying warheads to the existing warring factions. But, for other countries, it's important that, they also get their arms and armaments. So can Indian companies are seeing an opportunity in that sense?
I think, Sajid, you're absolutely right. What happens is that because of Trump's disdain of NATO and Trump's talking of the sphere of influence, though he's doing the other way around, but increasingly, I think whether it's NATO, whether it's Japan, whether it's India, they want self-sufficiency in defense. So that would be a very muscular foreign policy that would be followed. I mean, for Indians, it's not new. In the 1960s, we were all about self-sufficiency. So then we moved to a globalized world. Now we're coming back, and the world is coming back with us to the self-sufficiency model. So I think defense is one thing that the budgets across the globe will increase for local companies to do well. And because India is somewhat of a technological powerhouse in defense, they will be able to export a lot of the defense too. So I think in this new environment that Trump has created, I think defense would be a very promising sector.
But Ramesh, good prices and good news never comes at the same point. Are you willing to pay this price for defense companies?
Well, we happened to be lucky enough to buy defense when they started off pre-COVID. Yeah. But you're right, you leave that aside. Yeah. Today is a fresh day. What do we buy this prices? I think the shipping industry in defense, the destroyer frigates, this thing will continue to do well because the order books are still swelling. And markets are no longer going to treat them at P's of 5 and 6 that they were 5 years back. So I think they will be escalated P's. But can you make multi-bagger returns from them? Maybe not, but you can make a market return of that. But there are now, surprisingly, some private sector companies that are doing very well and are available at relatively good valuations. So I would expand my search to include not just the PSUs, which has been the favored sector for defense, but also the private companies who are doing more technology, more drone warfare, more optical fiber networks, optical fiber warfare. So I think those companies I would take a look at those companies, but the entire basket of defense stocks will probably do well. You probably are beyond the point of getting multi-bagger returns from that. We got a 10, 20x in defense over 5 years. I think, but they will still provide decent returns.
Ramesh, just getting back to the point that you were making about, AI and IT, and you gave the example of BSE. Are you safer as an investor to bet on AI consumers, which will benefit, than IT services traditionally as we know it?
I think IT services will do well. I think it's so fast moving that we need time to take breath and understand what the valuations of these businesses are. I think when I was a college student, Aisha, one of the papers that made a profound influence on me was a paper by Professor Theodore Levitt called Marketing Myopia. And he had a very interesting question. He said, why did the railroads go out of business in America? In the 1920s, the monopolies protected. As far as the eye could see, they could see revenue come in. And yet 20 years later, they were overtaken by aeroplanes. It's because they fundamentally saw themselves as in the railroad business, not in the transportation business. So I think the software business should get out of the feeling that we are warm bodies, we hire 500 people, place 500 people. Previously, Indian software guy would make 25 lakhs, 50 lakhs, and a US software guy would make $250,000 US. So there was no competition. We would win that race anytime. Now you're competing against a chip, a cluster, machines at $500. So the world will change. But the market is going to expand exponentially like the BSE brokers found out. The market expanded almost unbelievably out there. So there'll be plenty of opportunities in the tech, in the enterprise software. It's not that easy to replace enterprise software. I mean, you have an airline system that's been built over 20 years. You can't have someone wipe code and then leave because he wants to discover himself in Kathmandu, and which may happen. So you'll still need the scalability, the auditability, the robustness of these enterprise software. So I think for the next 2-3 years, these enterprise earnings will be good. People who do that thing will be good. After that, there will be a change perhaps coming down, and we should take cognizance of it. But there will be winners and losers, and I think the key determinant of that is those who are willing to adapt to change and to this new environment. So, if people are still sticking to the old model, I probably would not favor them.
Ramesh, if you look, in this entire thing of geopolitical risk, what's happening with sectors associated with it, we've forgotten about the consumption theme. The auto numbers were decent numbers. We saw
GST was good.
GST was very good. Actually, 1.83 lakh crores for the month of Feb.
GDP now is a more real figure.
GDP is a very buzzing figure.
And all these macro numbers which are holding up and are strong, it's been forgotten or discounted by the market now. How do you look at consumption as a theme now?
See, I mean, there are of course mixed opinions. One is if AI causes a lot of unemployment. That would affect consumption from everything from real estate to fast food. But the other trend that I think is sometimes not noticed by the market, which is a very profound trend, maybe not as profound as AI, is the GLP trend. You know, the idea that people can use GLP and the food consumption changes almost permanently. So a lot of the FMCG companies that are favored in India, which make processed food, will face problems. See, for Aisha, for the last 25 years since I've been in the market, or 40 years since I'm dating myself, we've paid the highest value market is paid is to software, licensing, royalty, brand agreements. All that is under threat now. So the world is changing and there's a sector rotation going on. And I can't believe I'm sitting here advocating the value in commodity stocks or in defense stocks. But increasingly the world is moving to those. And you know, Wayne Gretzky, one of the great hockey players of all time, said his job is not to go where the puck is, but where he thinks the puck is going.
Will move,
So I think I have to move and keep in pace with the times. So I would suggest to you some pharma companies, some infrastructure companies, some defense companies, and companies that benefit from AI. For example, optical fiber companies. You know, they'll benefit because you need data centers, people who build data centers, people who cool data centers. So there are lots of opportunities there. It will require a fresh set of eyes than the eyes I've been using for the last 30 years.
But you know, Ramesh, to the GLP-1 opportunity, and we're going to see that play out this month itself, it's going to be a very crowded trade. There'll be like some 10, 15 generic players out there in the market. How do you pick and choose?
I mean, you pick and choose whoever has got good muscular distribution out there. But it's such an enormous opportunity. I don't have the numbers with me, but it's such a muscular opportunity. But the one other way we're playing it is there are companies that manufacture the pens with which you deliver
with the jabs,
So, you know, you look at those out there. Some companies will, you know, be the first to file patent. So I think those you look at. But it also has positive and negatives, Aisha. You know, the negatives would, of course, be in the processed food business that, you know, would see a all-time hit.
But that's a very small segment of the market.
I mean, a lot of FMCG companies are...
are getting into packaged foods.
GLP, where do you see the value lies? Is it with the pharma companies or the companies which are making those pens, or many of them have tie-ups for distribution, the distribution companies?
I kind of saw that because I hate to admit on national TV, but I'm a GLP user. So, you know, I benefit from it. I realize the effects of that. So we bet on the entire spectrum, people who are patented producers of pharmaceuticals, the GLP pen manufacturers, the muscular distribution. So I think there'll be an opportunity for all, and these are so expensive in America. So as the prices come down, these guys will find enormous markets. But even that aside, you forget the GLP trade, particularly for semaglutide. But the pharma sector in India is in pretty robust shape. I mean, you go and visit companies, you generally see optimism, capex, growth. So I think India has become the medicine shop of the world, and rightfully so.
And that would be an advantage for the CDMO players as well?
Yeah, for CDMO, some people who have actually got, you know, FDA-approved plants in America, not even in India. So they will benefit from that CDMO. If someone wants to cauterize themselves against tariffs, you know, you want manufacture outsourced to America, you can do that now.
One of the biggest hit today is with L&T, and that's because of the exposure that it has to the Middle East. Do you think that it's a it's a very short-term thing with L&T, because none of the Middle East countries are involved in the entire war? Means they have their own development agenda going forward. Means whether you take the Saudis or the UAEs or Kuwait, others, everyone is investing heavily into technology, into building infrastructure. Do you think this reaction is a short-lived one for L&T?
It's a passing squall. It'll get carried over. I mean, it's actually the anti-AI trade, because say the economy goes into a mild recession, the government wants to pump prime the economy, they will do it through capex and infrastructure spending. So whether it's, I don't want to particularly name stocks, but whether it's Larsen, as you mentioned, or other infrastructure corps, they actually benefit from being the anti-AI trade. And the market is now moving to value these assets more. So this is perhaps, in my opinion, a good buying opportunity.
Ramesh, in the near term, the market always plays on sentiment, but eventually, in the longer run, it all boils down to earnings. Where do you see the next profit pool getting created? You
all asked me this difficult question this morning. I I don't really look at the macroeconomy, so I'm not really the best guy to look at that. But I look at my individual companies bottom up, and I'm saying a lot of profit pool is being created, say, in the pharmaceutical sector. A lot of profit pool is now quarterized in the infrastructure sector. Nothing is not going to be affected by AI. In fact, if there's war and there's damage, it's a buying opportunity because they have to be reconstructed out there. So, in that sense. So I'm not sure whether to look at aggregates, but I've learned one thing over the last 30, 40 years, that India is on a good trajectory, and they always ask you, what is the best day to invest in India been, Aisha? And I always say the best day was in July 1991, when Manmohan Singh gave the liberalization budget in India. That was the single best day to invest in India. The second best day is today, because the opportunities in the next 10, 20 years are infinitely greater. And just because we've come from 5,000 on the Sensex to 80,000, doesn't mean the opportunities go away. I mean, you could have said the same thing at 20,000, 40,000, 60,000 on the Sensex. Sensex is a way of going up. And I think we're in the right place, right time, right continent, right country. So I think we'll do well. So I think I would look at the sectors. Clearly, I would not buy blanket all the sectors, but I would remain invested.
Do you think?
Would you say the same about gold as well? That with each decade there is a new high, and then there is a new base which gets
See, I have
created.
a very controversial opinion on gold.
Which is?
When I was an MBA student, gold had one of the blow-off rallies that it's having now. So it went at that time to the unprecedented level of $1,000 an ounce. $1,000 an ounce.
Back then, yeah.
Back then, and that's really back then.
Yeah.
But 1980 said it was $1,000 an ounce. Today it's $5,000 an ounce. So from 80 to 25, whatever, 45-year CAGR, you do the CAGR. It's a very depressed CAGR for gold. And what Buffett famously told us is that if you buy 1 ounce of gold in 1980, you still have 1 ounce of gold. Whereas if you bought, say, 1,000 shares of Infosys, you probably have 1 lakh shares of Infosys, plus the dividends that give you out there. So if you're a trader, for example, and you can figure out the stock of gold is going to go up, it's a great thing. But for most investors in India, the young Indians who need to invest in SIPs, who need to invest in stocks for the next 10, 20 years, I would say look at equities, because the kind of dividend and cash flow they give you is extraordinary. Give you an example which recently happened. Buffett has been recommending Coke for a jillion years out there. I happened to buy in my overseas account some Coke a few years back. It was at $40 and was giving me a 3% yield at that time. Today the stock is double. It's still giving me a 3% yield. That's the power of equities, because the dividends itself make it. One company that you mentioned in the opening, in your monologue, was Bharat Electronics. I've had the stock for 25 years. And the kind of dividends that it pays out, I mean, it's something that a research guy should evaluate and see over the last 30 years, what is the kind of dividends this company has generated. It has generated far superior to the price you paid for it when you bought it at that time. So there's some extraordinary opportunities available in equities. You need to be patient. You need to learn to understand the volatility out there. But, gold is for the traders, the speculators. It's not necessarily for the individual investors. So I would urge, gold might make you popular in the cocktail party circuit, but it's not going to make you a serious amount of money, because it's going to be a volatile asset trading class. Gold, Bitcoins, these are, for most average Indian investors, I'm going to thump the table and say, buy a great quality business and stick to it.
Ramesh, you mentioned about the July 1991 moment. Do you think that similar moment is now as well? Because we're signing a lot of trade agreements. India is opening up in a bigger way to many of the developed blocks there, whether it's European Union, US, UK, or any other. It's a similar moment here for the trade, from a trade perspective for Indian companies?
Probably. I think the UK, from what I understand, the EU trade agreement is a benchmark deal which will affect a lot of companies positively in the commodity space, because Europe is not increasingly manufacturing themselves, so they will do it in India. So it is a benchmark moment. You've got to move away from the US-centric led world. So I think it's a great deal. Is it as important as 1991? Probably not. I think 1991, as the old timers will tell you, was the day India changed forever. So before that we were just a forgotten economy. No one cared about us. We globalized. We grew in size, grew in power. I think the corporate profits, the GDP have all. I don't have the numbers on the top of my head, but if you go back and compare India in 1991, India in 2025, it's a different country you're talking about.
Are you also looking at how supply chain economics is going to change now because of the geopolitics which is coming in? We're seeing a lot of geopolitics risk coming from the Middle East. hopefully there may be some peace after this Iran episode. But supply chain as an alternative supply chain for India and the world, is that going to be a theme going forward?
Absolutely, Sajid. It's going to be three words: localize, localize, localize. I think people have given up on the idea of globalization because, someone can put a crimp to this thing. For example, rare earths from, mined somewhere else, processed in China, and then used by the US and advanced economies of the world. That is now a threat. No one is going to rely on that anymore. Everyone wants a localized supply chain out there. So in India, for rare earths, or for aluminium, or for steel, people are going to make sure they protect their own supply chain, nearshoring, friendshoring. But I think globalization will probably take a backseat in what has been the norm for the last 30 years. And it's one man who's changed it. It's Trump. He's come back and, set the cat among the pigeons. I'm not going to comment on whether it's the right or wrong thing to do. But as analysts, we have to deal with the market as it is. And the reality says that supply chains will be localized.
What's the view on the dollar? I mean, because you do monitor global economies as well. Are there other countries that you're bullish on right now, investing, putting any money? And then dollar, do you think the dollar has reached its peak?
Will it continue to be an important currency in which reserves are held and trading
Sure,
done? Yes, it will. I don't think there's anything going away. But I think the reason gold has risen so much is because of de-dollarization effect. And the second thing is that the fiscal deficit increasingly becomes untenable in America. That's 6% of GDP. It's untenable at some point. At some point in America, and I think within the next 2-3 years, the so-called bond vigilantes, people who force the government to stick to an economic mainstream, will come out and by raising interest rates, will force the US government to take better action. As example, I give you what happened in UK. When Liz Truss tried to expand the deficit without corresponding revenue increase, they just sold the pound out, and she was out of office as the shortest-lived prime minister. Are we going to approach a similar moment in America? I don't see that happening right now, but I would not rule it out. The bond vigilantes are ultimately in strong force, and even the US, with its great credit and its great economic machine, will be impacted by that. And we're not that far away from that. So I think there will be a multiplicity of currencies, but the dollar will remain the preeminent currency in the world. But I think for right now, because people are holding down dollar reserves, buying gold, there has been a shakeout of, and the president of the US himself wants a cheaper dollar because that helps his exports. So
the bond, which is US bond 10-year, is around 3.97 now. You're going to see some kind of activity. Again, the focus going back to Fed now, with respect to how the Fed is going to react to the entire situation.
I think Trump said very clearly he wants lower interest rates, but the president doesn't get what he wishes for. The world markets work on their own logic out there. So I think given the deficit that America is running, in the short run, you might have 1 or 2 cuts, but the increasing needs, for example, he's talking about increasing the defense budget by 50% in America. And how do you increase by 50%? Who pays for it out there? You keep increasing the deficit, at some point, like I said, the bond vigilantes will come into power. So the idea that US interest rates would remain low throughout the next 3 years during the Trump administration, I think is a bit far-fetched. I think at some point, interest rates will spike up again. Because I'm very clear that whether it's Republican administration, they always used to accuse the Democrats of that, but the Republican administration have no concept of budget deficits, whatever they blow out through. So that will cause, you can see that problem, beginning to mushroom into a bigger problem in the next few years.
What about other parts of the world? Are you a China bull?
I think China is, I think the trouble with China is that it's actually taken a leapfrog. They've done a great job. I have full admiration for how they build the industry, the technology, the electric vehicle car. Full admiration for them on that. But capital has been very cheap in China. So no one has respected that capital, and that's why the returns to investors have also been so mediocre out there. And now in this fight of US versus China, you're almost forced to take sides. So many years ago in independence India, I think our first Prime Minister, Jawaharlal Nehru, used to say, we're going to follow a policy of non-alignment, non-alignment with any superblocks, which were, of course, USA and Russia at that time. I think we've come back to that stage. And I think the government has understood that because we have this new middle powers, South powers scenario. The Canadian Prime Minister comes here. The EU FTA trade is fine. India goes to Japan. So I think clearly we're trying to find a path, equidistance between the powers. I mean, China is not something that India has had very friendly relationships with, and that we can hope that they will, not do malware or cyber security problems with us. So we, but it's an important player. I mean, it's not a matter of being China bull or not. They're a very, very important player, and the technology
you can't ignore.
You cannot, and the technology they've caught up with America, and I think they're ahead in electric vehicles, they're ahead in drone manufacturing, they're ahead in robotics. I mean, anyone who goes to China comes back breathtaking by the possibilities that I've experienced in China.
Ramesh, so the market should focus on what China is going to do in the next couple of days. They're going to come out with the next 5 years plan in this week, especially with respect to how they're going to look at commodities, or for that matter, generating demand, or curbing competition in some sectors.
I'm not sure. I've not really followed that part, but the part about China that I think the world will worry about constantly is if Trump has gone to what he calls his spheres of influence, that we don't come in the Western Hemisphere, that's our sphere of influence. Russia can look at Europe if they want, and China can look at Asia. Is he giving him a blank check to take over Taiwan?
Yeah.
And I don't think he can do that because Taiwan is the most important company in the world today.
Semiconductor hub. Yeah.
Correct, the TSMC, Taiwan Semiconductor Manufacturer. So almost impossible for me to conceive that America would let China walk over and take over Taiwan because they know the impact of not having TSMC in the Western democratic fold. But, stranger things have happened. So, I'm not sure. I think given that the president has shown U.S. president has shown some muscular nationalism by just decapitating leadership and moving there, changing the rules-based order that we were used to. China can say, hey, you're doing this, why can't I do it? And clearly they're an economic and defense powerhouse now. So it will make for a very interesting world.
Yeah, very uncertain.
Uncertain
and markets hate
accuracy.
that, don't they? But Ramesh Damani, thanks for your words today. It was great to have you in person here to bring some sanity.
On, but that's the way the cookie
But we
crumbles.
needed your same voice. Thanks as always. We'll take